It's no turning back now.
Wait
Let me share my screen real quick, bro.
a second. Banks line up to embrace.
About to get into that content that no one is paying attention to, but they should be. What's going on, everybody? Locking in on this lovely Sunday. Grand Rising, Vincent, what's going on? Private members, what's going on? Public members, how are you feeling today? What's good? Valerie, what's up? CC's, what's going on? CC's, what's up, bro? It's about that time. I agree with you, Vincent. Buy that XPR dip. Not financial advice, though.
Yo, XPR is such on a solid discount right now. It's not even funny. It's not even funny. And literally 2 days ago, that bad boy was up.
Sunday service. What's going on, y'all? What's going on? Hey, we're going to be on a live real quick, and then we're going to roll over and funnel all of you lovely listeners on this Sunday over to Echo's call, because we're going to go jump on Echo's call for a little bit. Let's jump in, though. I want to, all right, so I called up Aqua and told him about this video right here. This is the Cybos 2025 event that took place just a few days ago. Man, this dude was spitting some absolute gems, bro. He was talking about how digital wallets are going to be key for future business infrastructure, and how all of these organizations are going to be issuing their own wallet so that they can utilize stablecoin features like posting stablecoins as collateral, bro, just all kinds of crazy stuff, right? And he was talking about how the regulatory clarity has shifted, and the recent regulation has allowed financial institutions to finally feel comfortable to go into this full scale. And it just aligns so much with what's happening with what Sandy Call said, how we're going from, this account-based system into this wallet-based system, which I'll play for the audience real fast so we can get that out of the way. But dude, this just goes hand in hand with what we've been researching. And honest to God, again, without sounding like a shill, if you just do the research, a lot of it is what Metallicus is aligned with what they're building now with WebAuth Wallet, how they have the ability to provide financial institutions, specifically credit unions, the ability to create compliant, regulated stablecoins with their own brand on top of it. It's crazy what's taking place right now. So again, just do the research. It's right there in front of our eyes. This is honestly a crazy moment in history that we have access to this type of information. And so it'd just behoove everybody to put the ego down for a second and not be biased towards certain products or certain other people's opinions in this space, and really just dig deep into the research. So what am I doing real quick? Showing you that video of Sandy Call, because I know we posted it. Sandy Call talking about us going into this wallet-based system from an account-based system. Let's see if we can find it. I know me and Aqua posted it. There she is right there. Let's see. Aqua, what's up with you this Sunday, bro? Real quick while I'm finding this video.
Man, I'm feeling good. About to hit this gym. Once we're done here, get my lift on for the 14th day in a row.
So just
she's not on The Voice. Okay, what she say? A few people have an advantage point, regulated frameworks. Hold on, is this where she says it?
Policies and assets we own, a savings account, a brokerage account, a retirement account, maybe an investing account around that. We have lots of different accounts.
Yeah, this is it. All right, so listen to Sandy Cole right here. This is where she's talking about in this interview. We're about to transition into this account-based system. Pretty sure this is the one.
Right? So just to kind of go back to simple framing, right? Underlying it all is a really foundational change that people need to wrap their minds around. And that is, for the last 50 years, we have been having an account-driven system. So you and I, we probably have a checking account, a savings account, a brokerage account, a retirement account, maybe an investing account around that. We have lots of different accounts. We're moving away from the account based world to a wallet based world where we're going to have one wallet. That wallet is going to be able to contain all of our assets. It's going to contain the digital forms of money that we spend. It's going to contain the digital investments that we hold. It's going to hold our digital identity document. It's going to hold digital copies of the titles to the insurance policies and assets we own, right? It's going to really be the foundational piece of financial architecture for our lives. And all those things you mentioned, right? The stable coins. Stable coins are putting the cash into the new wallet-based ecosystem. Tokenized money market funds are putting the savings accounts into the wallet-based system. Now we're seeing tokenized stocks and bonds putting the investments into the wallet-based system. So this is what I mean by the migration. These feel like a lot of different things happening at once, but if you look at the underlying theme that ties them together, it's that we're starting to see the assets move away from the account-based to a wallet-based ecosystem.
Wow. And she specifically said at the beginning, this is something everybody needs to wrap their minds around. You know, they're telling us this straight to our face. This is not some, oh, it's not happening thing anymore. This is knock, knock, knock. Hello, wake up. The financial system is changing. And if you aren't on board, you risk being left behind. That is the era that we are in right now, y'all. So,
And those capabilities to the T-WebAuth wallet can do that. So I don't know. I can't speak on other wallets right now in this moment, really. But the only wallet that I can think of that can do everything that she just said is the WebAuth wallet.
I think that there's going to be a multitude of wallets in the future that exist that do this, but we're definitely at the forefront of seeing winners and losers, right? Winners and losers. And you really got to pay attention to who the winners are, who has the technology in order to really build infrastructure that is going to be required for these financial institutions in a regulated, compliant manner for them to onboard. Come on, guys and gals, this whole entire structure is changing. And if you don't pay attention, again, so this is a video breakdown, bro. This one's going to blow your freaking mind. Okay. This is, let me just get his credentials correctly. Stephen Richardson, Chief Strategy Officer and Head of Banking at Fireblocks. Fireblocks partners with hundreds, if not, I'm pretty sure thousands of financial institutions. I think it's like 1,800 institutional partners Fireblocks has. You might need to fact check me on that, but it's definitely more than 100 banks are messing with Fireblocks, right? So regardless if my numbers are correct or not, you just kind of get a gist of who they are. So this dude's not just some nobody, right? And this is a Cybos TV event that was released just on October 3rd, 2025. Shout out to the researchers for this. This entire playlist from this entire event is in our CyberX Discord, and there's so many gems on it. Listen to what this guy says here. He talks about there is regulatory clarity for banks to engage in these digital assets. I repeat, again, he says there is regulatory clarity for banks to engage in these assets. That is a huge wake-up call to anybody that's still screaming regulatory environment isn't sound anymore. It's not sound anymore. No, that's changing, and that mindset that we used to have a couple of years ago needs to shift with the changing tides. We need to understand that things are now changing. All the previous uncertainties that exist, and as we continue to mature in the digital asset ecosystem, the environment's going to change. And if our mindsets and how we react in terms of our actions don't change with it, again, you risk being left behind. So check this dude out. Listen to what he says here.
Banks are no longer debating if stablecoins matter. They're now asking to scale them as part of their core financial infrastructure. As global trend, it's clear regulation is enabling, not hindering, and stablecoins are moving into mission-critical payment and settlement flows. And for
I just had, bro, that right there. He just said stablecoins are starting to move into mission-critical flows. Okay.
more on this, we can speak to Stephen Richardson, Chief Strategy Officer and Head of Banking, Fireblocks. Hello, Stephen. Welcome to Cybos TV. I hope you've been enjoying Frankfurt over recent days as much as we have here. Now, banks have moved beyond asking why stablecoins matter and are now focused on how to scale them. What factors have driven this shift in strategic thinking and at the leadership level?
Yeah, so I think most clearly it's around the utility, around the use case. I think when stablecoins launched, they were quite niche in terms of solving problems for crypto native players. Over the last few years, you started to see stablecoins be utilized by payments firms, PSPs, as a mechanism of really enabling both retail and SMB type payments on a cross-border level, right? And there's real utility in terms of speed, transparency, and cost for utilizing stablecoins. And so as you started to see a shift in that model, as you started to see clarity around regulation in places like the US with the Genius Act, in the EU with MiCA, in places like Hong Kong towards Japan and Singapore, I think there's now regulatory clarity to engage with this new asset on chain. And there's a commercial opportunity that we've seen as being viable in terms of really solving some of the pain points around money movement for corporates and for retail. And so I think this is galvanizing the business to really look at the opportunity that exists and to look at the areas of value proposition that a bank can add in terms of utilizing a stablecoin.
Now,
So the dude just confirmed 3 different regulatory shifts that have taken place that have now given banks and financial institutions the clarity in order to start interacting with these digital assets. You all heard that, right? That's crazy work right there. You know,
What and where are they at? What country are they in?
this is in Frankfurt in Sibos, the event that took place just a few days ago.
Okay.
All the biggest banks, all the biggest and largest financial institutions and fintechs go to meet and talk about the future of finance.
Okay.
Bro, in these videos, you know what's so crazy to me? The world is so lost, you guys. Y'all, our followers listening right now. This is one of the biggest financial events in our modern society where all these financial institutions go meet up every year. It's just like, it's almost as big, if not bigger, than the World Economic Forum Davos event that happens at the beginning of every single year in January or February. It's like the same thing, except the end of summer event where all the banks and all the biggest fintechs and all the biggest financial providers, MasterCard, the Visas, the Swifts of the world, the freaking Euro clears, all the central banks, they go to meet here.
I see.
Yeah, bro. This is a huge event. And look at this, bro. Look at the views on these videos.
Dang, only like 144. Like they're not even in the thousands. Low
Bro,
hundreds.
the world is asleep right now, bro. Look at all this. Look at these views. It's all like 100 views, 200 views, 50 views.
And they're putting
Right.
there's alpha being said on this stage. Like mad.
Bangers, bro.
Yeah.
Like there's over almost, what is this? Look, 60 videos from this event. And I guarantee you all together combined less than 10,000 views.
Yeah, damn. It's a good call.
Anyways, back to this guy. All right, so he was just talking about how, you know, banks and financial institutions have the regulatory clarity that they need to engage with digital assets. That's important. All right. Second part where he goes on to talk about kind of what Sandy Cole just recapped on, this wallet-based system. And listen to what he says here. I'm going to slow it down to 9.5 speed. He talks about how wallets are going to be key to business infrastructure. They're going to be foundational, and that these financial institutions and these integrations of these wallets are going to allow them to usher in these services to their clients so that they can take their clients to the next level, right? And it's going to be through the integration of stable coins and how banks are going to launch their own wallet and their own stable coin. And then we go take a look at who's doing this right now for banks. Metallicus, St. Cloud just launched the first freaking stable coin. Dude, it's crazy work what's happening right now. Just go listen. And then Aqua, pause me if you hear anything that you want to cap on.
I got you. Run it.
Overview, right, and clarity that you can engage with this technology and with this new asset class provides the scale that we think is. I think having that regulatory overview, right, and clarity that you can engage with this technology and with this new asset class provides the scale that we think is necessary to really grow the utility of the tool.
Now, when Fireblocks talk about infrastructure being the next frontier via enterprise-grade custody, compliance, and connectivity, what does that actually look like for a bank trying to live with stablecoins?
Yeah, so I think at its core, right, the wallet infrastructure is what we think is key to launching any business, right? If you think about it at a basis, the ability to have a wallet means the ability to interact with a blockchain, which provides information on where an asset exists. It also provides clarity in terms of utilizing that asset, the ability to sign a transaction, to move the asset from one wallet to another. And so that becomes critical at a foundational level. I think after that, you're then starting to build tools on top of that, whether it's payments orchestration, the ability to issue a stable coin through things like tokenization. And so, for us, that foundational level is necessary. And then what you start to think about from a bank level is the ability to create really strong user experiences, both at a retail level, but also at a corporate and commercial level that allow people to really find the utility in utilizing the stablecoin. So whether that is accessing different VAS within a network, whether that is the ability to move funds from your DDA account and then mint a stablecoin, whether that's things like FX, so ability to move between currencies and on and off ramps, those toolings and that UX UI experience then become something that really makes the asset work, right? And provides the global distribution and the global scale that's necessary. So I think that's where we see the opportunity: core wallet infrastructure at a baseline, but then services that can be deployed by the banks and by financial institutions on top of that wallet infrastructure.
No, $5.
Yeah, bro. Services and solutions that can be deployed on top of that wallet infrastructure.
What he's explaining right now to the T, if you know, you know, he is talking about the foundation of the metal blockchain, that layer 0, being able to mint those stable coins, give these guys their own blockchain, and then they can build on top of the XPR network where they can put the dApps, the protocols, borrowing and lending protocols, where they can get that liquidity working. Literally
At the same exact time, he's sitting at Sibos saying all this stuff. When that event is going on, what's happening in September? And the landmark move, you guys heard him say these wallets and this new infrastructure, giving the banks the ability to launch their own stable coins, right? And a landmark move for U.S. banking, SafeCloud Financial Credit Union, together with Metallicus, the core developer of the metal blockchain. This happened September 16, 2025. And a leader in blockchain tech for financial institutions, Indelan, or CUSO, Credit Union Service Organization, will issue Cloud Dollar, or CLD USD, the nation's first. I repeat, this is like huge stuff right here. This is not some I don't get it where people are like, no, the nation's first. That means nobody else has ever done that. Credit
Nobody
Union
else.
Stablecoin. This proves right here that what this dude is talking about, all the banks are going to be utilizing in the future. Metallicus houses this technology. Now, I'm not going to sit here and say that Metallicus is going to be the only one, because there is not going to be one blockchain to rule them all. But this is physical proof that Metallicus is leading the charge in what the banks want. And that is their ability to launch their own compliant stablecoin, y'all.
There's going to be more than one winner, but I'll say this. The one who's winning the race right now, in my opinion, is Metallicus all day.
This stuff is wild. Yeah, so I knew you were going to click with this video when he said that. That's why I wanted to share this one first before I do my other spiel. But yeah, bro. So you mentioned he talks too about digital identity, right? And how it's going to be critical importance.
Mm-hmm.
Right? And so listen to what he says here. Let's continue. Well, go ahead. What are you going to say?
Yeah, to use the WebAuth wallet, you have to KYC that bad boy. So it's all about digital identity. You can't even use the WebAuth wallet until you've done the KYC. So,
I feel like this whole entire notion where people are like, digital identity is bad and we're against it and all this stuff. Like, there's no fighting it, y'all. You understand that, right? There's no fighting it. There's going to be people that try and attempt to fight it, and they're just going to get sucked in eventually. They're going to have to, because the government's probably going to make it in the future to where you're not going to be able to enjoy life without having a digital identity. You guys just saw the announcement. Don't believe me? Go look at the recent announcement from the UK. The UK just announced that if you don't have a digital identity in the future, you won't be able to find work, right? That was just announced like last week. Okay, don't believe me? Go fact check me. Go look at what the UK just announced. And that's coming everywhere in the future. It's going to be the new standard. So eventually you're going to have to do it. So why not figure out the technology that's going to be running all of that infrastructure and benefit from it, so that way your bloodline is part of the new 1% that's benefiting from all the technology financially that has the rest of the population in this little tiny sheep cage, right? Think about it like that. It's just like the internet. Go look at all the multimillionaires and billionaires that have businesses. It's because they knew that there was a massive shift in the way communication happens, right? And so they invented an internet technology infrastructure. And now those are all the people that are multi-billionaires. Well, guess what? The financial foundation is changing, and these are the new technologies that are going to run all that. And you can either adapt with it, adopt it, invest in it, or try to fight it and act like it's not happening and call it a scam and get completely sideswiped. And then eventually 5-10 years down the road, have to use it anyways.
Yeah, that's real. That's mad real.
You
I
know?
was just thinking about it too. Like before internet really became what it was today, there was probably some visionaries that could envision what me and you are doing right now on this podcast, literally streaming to however many people we're streaming to on multiple different platforms, right? But this was like you had to have been a visionary to see that, that future, and that's what we're doing right now. We're able to see this near distant future, that creative finance. You know what I mean? So.
Yeah, creative finance. Who was it the other day that we shared said creative finance? I don't remember, but all right, let's finish listening to this guy. So he talks about sending stable coins through banking wallets, digital identity, and how it's going to be critical importance and part of the infrastructure.
Is working with 80 banks,
Yeah.
over 80 banks
Yes.
worldwide at the moment on pilots as well as production scale deployments. Where are you seeing the strongest demand right now, and what role do you play in helping institutions move their digital asset initiatives forward?
I think when you looked at banking before, really stablecoins represent the first real commercial use case, right? Outside of speculative crypto trading per se, right? And obviously in the US, where we anticipate things around the Clarity Act, there's been more of a movement by, broker dealers and others to engage in more crypto trading. But at a banking level and things like corporate transactional banking, stablecoins represent an opportunity to add a new service on a basis that's more efficient, right? And so
What the fuck did I just find, bro? Hold on. Okay, so you heard him just say how many? Okay, so you remember what Metallicus was involved in with credit unions, and didn't they have a number of 80 credit unions or something like that? Wasn't it 80? Isn't that number?
80 for what? What was that? Like in the
What was
banking
it? Like
innovation program?
the pilot program or whatever that Metallicus is involved in. Wasn't it with 80 institutions?
It's more than that, but yeah, there was an announcement with somebody that had 80 that was going to be in the banking innovation program, but it's more than 80 though.
Can we check that number, bro? Can we see if what that number? Because you heard him just say that he's involved with this pilot program, right?
Yeah,
He said that just now, right? Okay, so look at what I just found, because I just researched real quick Fireblocks and Metallicus just to see if anything popped up. Look, Fireblocks hosted this event. Says wallets, the next generation and new challenges. April 2024, and I was like, nah way. All right, let's see if a Metallicus representative was at this event.
Yeah, Arena's right there. Yo.
Bro, stop playing.
Oh wow. All right. Dang. So
you got Wallet Connect, Arena Birkin, and the director of retail and fintech business lead at Fireblocks talking about Wallet, the next generation and new challenges.
I wonder if somehow, some way, Wallet Connect could actually use WebAuth as well and just set itself on top of it, just like a financial institution. Just thinking outside the box. I don't know if that's that would happen, but what do we know about Wallet Connect? Most of those wallets they're not compliant. You don't need a KYC. Like Tangem uses Wallet Connect, but they could easily become compliant overnight if they said, hey, let's take our wallet and then integrate it with WebAuth wallet. It's still going to say Tangem wallet or, Wallet Connect wallet, but it's going to be using WebAuth's KYC, everything that's embedded in that wallet, and make them compliant overnight.
Let's finish listening to your, yeah. Make them compliant overnight, I think, is the key takeaway.
Yeah.
Plug and play, literally.
Exactly.
Plug and play solution. How many times have we heard that?
Exactly.
All right, let's finish off what this dude was saying. Digital identity.
A lot of the pilots that we're seeing today focus around things like tokenized deposits within large-scale banks where there are multiple subsidiaries, and a tokenized deposit would be helpful for enabling money movement internally, and then integrating that against something like a stable coin where you have a more open network system. And so, the banks there are really looking to understand how these different tools fit together, these different assets on chain fit together. And corporate payments, for example, is a pretty significant use case that we're seeing arise right now.
You've mentioned helping banks define the standards for the future of finance. What are the critical standards that need to be established for stablecoins to become truly mainstream in payments and settlement?
Look, I think you always think about things like KYC and AML risk, right? How do you really define who you're interacting with, right? How do you ensure that transactions are going to the right place and that you're not utilizing funds on a malicious basis? I think things like on-chain identity will start to become important, right? So obviously banks have significant KYC data on their users, and the ability to tie that into on-chain data and wallets, I think becomes a critical basis. So you can envision a world similar to what we have now with P2P payments. Think about Zelle in the United States, where you're onboarded via a bank, and then you have a unique identifier that's tied to that banking information, and then you're able to send an asset across. That asset in the future might look like a stable coin, right? And so the ability to really scale out that infrastructure over time, we think is really important. And then the ability to really map the networking and messaging, so things that Swift does really well today, to be correlated to on-chain transactions becomes another important part of a piece of the puzzle in terms of scaling out the use case for stablecoins for corporates.
Now I'm going to ask you to look ahead, Stephen. If we were to reflect on this conversation in 5 years' time, what would you expect the stablecoin landscape to be in banking to be looking like at that stage?
Look, I think it's a good view around being highly interoperable, and I think this goes back to the wallet infrastructure for at first basis. So at Fireblocks we support over 100 blockchains, and the ability for a bank to say, we don't really care where that asset is issued in terms of blockchain, but we're able to support that asset and recognize it becomes one thing. As you think about token issuance and the ability to have things like cross-chain interoperability, I think that's important. I think in 5 years, the UX UI experience should say, we don't really care who issued the asset. We don't care which blockchain it is on, but we're able to recognize it and move it seamlessly, such that a retail consumer or corporate consumer is not necessarily concerned or sees this asset as a separate asset from their fiat funds today, right? It's just an asset that moves value around more seamlessly and instantaneously. And that's what's exciting. And that's what we anticipate to be the future of payments and on-chain finance.
Well, hopefully.
Go ahead.
I swear to God, he's talking about Metal. I swear to God, he's talking about Metal blockchain, man. Because he said it doesn't matter what blockchain. We don't care what blockchain it's on. And on the Metal layer 0, everything is communicating via subnet. So they're not going to care what blockchain it's on. It's all on the same layer. So they can still see what's going on. Doesn't matter what blockchain, just like he said.
I think from the first portion of this video breakdown, so we can roll into the second, and then we can hop off here for today, so we can go give Echo some respect and jump on his live call. Is that?
Or actually, I don't think Echo's call is live, bro.
It's not.
Yeah, it's a private call.
Oh, sweet. So we can go jump on Echo's private call.
Yeah.
Is just that Metallicus is leading the charge in a lot of what these industry leading experts are discussing and talking about. This wallet based system that we're headed into from an account based system. And that these financial institutions are going to want to issue their own stablecoin, regulated, compliant, and a wallet-based infrastructure that their clients can utilize for different functions and purposes. So make sure that you guys are paying attention to these types of details, because they're the things that don't really get talked about via mainstream crypto influencers, because everybody's so fixated on price appreciation. Focus on infrastructure, focus on what's really being built out. It gives you guys very clear insights as to like time frames and where we're headed and the momentum and just the overall perspective from a institutional standpoint on what's happening in the digital asset ecosystem. So as we roll over into this quick second portion of today's call, I just want to show you guys that these banks are at a point. They're at a transition point where they are for a fact paying attention to things like DeFi. They're at 110%. In boardroom meetings talking about blockchain. I'm going to kick it off here with this gentleman from Janus Henderson Investors, Nick Charney, and he goes on to confirm that you can't be in a bank boardroom meeting anymore and be ignorant on blockchain. Take a second here and just listen.
Conversation started 2.5 years earlier with him.
Yeah. And so we talk about product market fit, and you talk about having talked about blockchain for 8 years with an organization. Why now? Why were you able to do this now? And how I guess answer that question. Then I have
Yeah.
a follow-up question.
So let me answer that like macro, like why is it that there is so much more attention from traditional finance right now? And actually the answer to that, this is just this isn't the specific conversation that's happening, but I am very regularly having conversations with extremely large global institutions who want to understand what we're doing. They're not going to invest, right? They're not going to go into tokenization in the next 6 months, but they want to understand it. They're like, why are you guys doing this, right? And almost without exception, the data point that gets them to like pay attention is just this kind of a little bit misconstrued stat, but it's still a powerful stat around the dollar volume of stablecoin transactions in 2024 being in excess of the combined dollar value of transactions for Visa and MasterCard. What does that have to do with RWAs, right? Like, it's not directly related, but if you're in traditional finance and you hear that, you're like, wait a minute, this is like, that is something I need to pay attention to, because it's just directly at the core of very boring traditional finance, payments, et cetera. It has nothing to do with Bitcoin, it has nothing to do with Ethereum or Solana or any of these things. And you can get your head around that. And so it's like, I better pay attention. So it's that, like, I would say mind share that's been created. And then the other piece obviously is regulation. So for the last 8 years, it was every conversation I was in, it was very easy for somebody in that room to be like, yeah, this is huge, but it's illegal.
Yeah.
Like they could just, but yeah, well, yeah, we'll pay attention when the regulation changes. And it wasn't true. There was all sorts of things you could do under that regulation, but the pace of change, the passage of the Genius Act, like it's just taken away a lot of those excuses. And so those two things have come together to make people pay attention. And then they've got to figure out, okay, what am I going to do? Because as an asset manager, like stablecoins is not particularly interesting, right? I mean, it's obviously a very important thing going on in the world, but for like our core business model, there's not that much for us to do there. But it does mean that people are all of a sudden willing to pay attention, think about it, and they have to know something about it. You can no longer be in a boardroom and just be ignorant of blockchain.
Yeah.
So you have a traditional investment player going on stage and openly admitting you can't be in a boardroom anymore and be ignorant about blockchain. And I'll let you say something. And he specifically said, like, that excuse that regulation isn't existent anymore and previously was allowed to keep you sidelined, that's not an excuse anymore. So again, look at that from the retail standpoint. You got all these people that are like, oh, I don't want to touch it. No, that's an excuse now. We're not in that environment anymore. We've transitioned, and you have to as well, mentally, physically. Of course, always assess your own personal risk. There will always be risks involved in investing, but a lot of the risks that involved in the infrastructure previously are not there anymore. And we're going to continue to mature. What were you going to say, Aqua?
I was just going to say, I think me and you can literally sit in those meetings and have a full-blown conversation and tap in with these people.
Big facts, bro. 110% on the intellectually inclined level with my dreadlocks braided in a nice suit.
And my neck tats.
Yeah.
Hey, and to answer your question from earlier, the 80 plus, if you want me to share my screen real quick, I can share with you. It was Bonify, and it's right here on their website, on the Metallicus website. It says here, enabling 80 plus credit unions to move on chain.
Yeah.
And that's
so
just Bonify. That's just Bonify.
That number 80, though, when he said 80, I was like, wait, I've heard that before, involving Metallicus and 80 financial institutions.
Let me share it on screen just for the record, and I can share it. You know what I mean? Let me just let me show you real quick here.
Because when I heard that number 80, I was like, oh, let me go see if there's some type of connection with Fireblocks and Metallicus, because he said 80, and I knew that number 80 was prevalent on the Metallicus side of things.
It's right here.
Yeah, beautiful.
Announced acquisition of Bonify, enabling 80 plus U.S. credit unions to move on chain. So,
and it must be coincidence that the dude from Cybos, from Fireblocks, was talking about this wallet-based infrastructure and these banks, having the ability to issue their own compliant stablecoin. But then a year ago, you got Metallicus sitting with Fireblocks talking about wallets and the next generation of new challenges.
And Arena's there.
Working. Come on now, man. This ain't no winky dink, bro. I love this research, man. It's so beautiful when you're just open-minded, and you just dig.
Facts.
All right. So I want to continue to prove real fast while we got 10 more minutes. All right. These people, the heads of these large organizations, some of the biggest in the game. For example, we're going to just tap in real fast. This is the chief business officer at Swift, and Michael Spiegel, the global head of transacting banking, Standard Chartered Bank. Come on, y'all. The 5th? So 2 days ago, this video was posted and only has 230 views. And in this video, they literally confirmed that the future of finance is going to be token based. Like he specifically says, we are going to choose tokens. We are going to choose tokens. That is a huge, freaking massive shift in the vocabulary undertone. And then he also confirms here that, digital assets are on the precipice of going mainstream. Take a second here and just listen.
With you, sir. We've heard a lot this week about the benefits of tokenization. Can you help us understand what this will bring to your end clients?
Yeah, look, clients are increasingly looking at a world where they want not only to see data, but also assets and therefore value move instantly. And that's currently not the case. And in emerging markets, in fast-growing markets, the demand for always on is accelerating, and they're looking at reliable services. And tokenization is actually bringing a reliable service, actually brings innovation to the market that we can then bring to our clients. In my mind, the landscape of finance or digital finance is at a tipping point. So tokenization and digital assets are about to move from pilot into mainstream. And at Standard Chartered Bank, we have from pilot into mainstream. And digital assets are about to move from pilot into mainstream.
Oh, man, from pilot to mainstream. Bro.
And there's 230 people done watch this, bro.
How many pilots are going on out there in this digital asset world? The only one I'm aware of is the Banking Innovation Program. That's the only pilot I'm aware of.
There's a lot of pilots going on. A lot of pilots, a lot of friggin' innovative tests, a lot of proof of concepts. But still, the fact that you have a large financial institution sitting on stage saying this, it's just like, come on, there's no arguments here. These are the people that control the financial system. So like, you have people in your family that are skeptical to crypto and digital assets. Go be like, hey, look up Standard Chartered Bank and look at how massive they are as a probably globally systemic important bank, I'd assume, at least to that tier. And look at what the freaking CEO is saying right here on stage 2 days ago. Hello, digital assets are about to be the new frontier. This is crazy. Now, that wasn't even the craziest confirmation, because remember this snippet of today's second portion of the video, I wanted to just confirm that all the banks are about to come. We've heard the DTCC representative say it. Now this is coming from the Swift gentleman here. And he says all the banks specifically, and that eventually they will choose a stream of tokens. They will choose tokens. That is just huge vocabulary right there to me. I don't know why, it just picks my ear. And I'm like, okay, that's confirmation that eventually there will be winners and losers. To what those are going to be in the future, again, it's all our best bet to do the research now to assume what those are going to be. Nobody has a crystal ball, but it's most likely going to be the people that are doing research on blue chip digital assets to provide real world value and use case to this new financial system that win, right? So just listen to what this dude here says.
Institutions, we need to tackle this together. Every single institution is already in its journey to improve the service level to their clients. And in order to unlock that benefit of scale, we need to work together. And this is what is most exciting about the moment where we live, is the coming together of these financial institutions. We, Swift, will take the lead at the infrastructure level, making sure the technology is there. We are collaborating with Consensus for the first phase of the prototype, but working with the financial institution is critical. We'll work with them. We will consult central bank to make sure that we choose the best settlement model, the best tokens for that exchange to happen.
Michael,
choose the best settlement model, the best tokens for that exchange to happen. To make sure that we choose the best settlement model, the best tokens for that exchange to happen.
That honestly tells us too, again, that there's going to be more than one winner, because
tokens,
I feel like
plural,
because what he's saying there is like, all right, well, maybe, this technology, like, for example, Solana makes more sense for this institution. And then maybe, this digital asset makes more sense for this institution based on how they're running their business and how they work. Because
Multi-chain
again,
ecosystem, bro.
exactly.
It's
But
gonna
they
be
all can
multi-chain.
connect, they all can communicate, but they all are tailored to do different things, and it has, you know, different tech embedded in each chain.
So, you know, that was the last thing. I'll read this too, because we got 5 more minutes. So I just wanted to throw this in there because this specifically has to do with DeFi and like waking people up that this is specific proof that some of the largest players in the game from jurisdictions that were otherwise relatively, you know, against crypto and Bitcoin just a couple of years ago. This is a post that I made. I said in 2025, we got major confirmation of where finance is heading. Banks aren't just experimenting with digital assets anymore. They're preparing to turn digital assets into yield generating machines. Excuse me. For years, DeFi was brushed off as risky and unregulated. But now, regulated giants like China AMC with $386 billion of assets under management are launching tokenized money market funds across the US dollar, RMB, and the HKD. That's not just innovation, it's proof. This shows the future. Traditional finance yield strategies are moving on chain. Crypto holders will soon have direct access to bank-issued yield products. Institutions are setting the stage for compliant looping, staking, and yield farming strategies at scale. The gap between TradFi and DeFi is also closing faster than most people realize. What started as an experimentation in retail is evolving into a global regulated yield economy where digital assets don't just sit idle, they work for you. And so I want to pause right there. And I just want to take you guys briefly over to this gentleman here. Let me just find the video real fast before I read this document and we end today's call. As I just mentioned, looping, right? That these financial institutions are participating in looping strategies. Well, let me show you guys this gentleman here. Give me a second. Let me just find it real fast. He specifically talks about how these institutions and how they themselves are participating in looping strategies in order to maximize yield returns. Hedge fund perspective. Give me 2 seconds. I just need to find it in my history. We got timestamps for everything. Hedge fund perspective right here.
I'm here in Marissa Tomei's kitchen.
All right. So who are we going to be listening to? This is Sonato Rao from Monarch Asset Management Firm. All right. So they are a large institution in this space. And listen to what he says here about looping.
Adding on more risks, I need the yield to be higher. And depositing that somewhere, looking at, and which is why what ends up happening for us is we end up looking at real world assets, and almost always we are looking to loop it. Right. So, and I know it's not a security question. So in fact, we're actually adding more risk, right? But we like to loop it so that the yield is higher than what it would be traditionally in just from the asset itself, right? And looping means basically depositing, rehypothecating the asset, depositing that somewhere, borrowing USDC against it, and buying more of the same asset, and so on. And so for us, I guess the best way to say it is because I'm
right. So he just openly admitted on stage at a recent 2025 event that they are participating in looping. And if we go back here to my post where I was talking about this large organization, China AMC, look at this document that they put out. All right. This is literally from March 31st, 2025. So it's as of this year. And it tells you how much they have in assets under management. So this is no like, you know, random organization. This is Chinese lead asset manager in Hong Kong. Okay. This is massive. And what are they talking about in their freaking documents right here? Let's read some of the highlights. It says qualified brokers and banks. New tokenized money market funds demonstrated in or denominated in US dollars. The 3 funds constitute a suite of efficient, compliant on-chain yield generation instruments offering multiple advantages, including enhanced value creation, greater transparency, and streamlined transaction processing. It says right here, reaching broader base of investors and aligning with the evolving digital asset landscape, we've seen growing investor demand for on-chain yield generation instruments, particularly from virtual asset owners, i.e. crypto holders. Such as regulated stablecoins, they will become more prevalent. It is our aim to develop practical approaches that promote capital efficiency and bring value to our clients. Here it says, we seek to enhance market diversity and maturity while delivering tailored solutions to meet evolving needs of a broader client base, offering investors with more comprehensive wealth management services. We believe this is only the beginning. As regulated digital money gains traction, the future of capital markets will be increasingly on-chain. It's the blueprint for how institutional capital will flow in the tokenized future. So they're literally telling you guys, on-chain yield is about to be a thing, putting your digital assets to work in a wallet provided by these large financial institutions that were previously sidelined is all about to change. So hopefully you guys enjoyed this quick video breakdown. Me and Aqua got to run. We're going to go hop on a call with Echo. Many blessings to you guys. Appreciate the love and the support that you guys show every time you come out. We have almost 2,000 listeners on this call today. You guys will see more of us throughout the week. Smash that thumbs up button and subscribe. If you guys, as always, want to tap in with our private community, want access to all this deep research information on a daily basis, head over to cyberxtrading.com. We'll see you in the Wealth 28 Club. We'll see you in the Discord. Blessings to you guys. Enjoy your week.
Much love, everybody.